Non-playable coin, NPC market structure report. NPC is currently trading around a $52 million market cap, sitting far below its previous euphoric peak near the $500 million to $600 million range. While many traders immediately classify charts like this as dead, the deeper data actually paints a far more interesting picture. After analyzing the chart structure, liquidity, holder concentration, and on-chain activity together, NPC appears less like a collapsing meme coin and more like a compressed post-cycle survivor asset. The most important technical observation is that NPC has stopped aggressively making lower lows. For months, price action has stabilized around the $45 million to $60 million zone, repeatedly absorbing sell pressure without entering another major capitulation phase. Volatility has compressed heavily, volume has declined steadily, and the emotional panic phase appears largely exhausted. In crypto markets, this type of structure often emerges after the majority of weak hands have already exited. One of the strongest bullish structural signals is liquidity retention. NPC currently maintains approximately $2.4 million in liquidity, which is extremely important for a meme asset at this stage of the cycle. Truly abandoned meme coins usually lose liquidity rapidly, creating unusable slippage and making large trades nearly impossible. NPC still maintains active markets, functioning liquidity pools, and consistent trading activity, meaning the asset remains economically alive rather than structurally broken. Holder distribution provides another major insight. NPC still has roughly 19,000 plus holders, which is surprisingly resilient considering the scale of the previous drawdown. Most meme coins lose the overwhelming majority of participants after hype disappears. NPC retaining this many holders suggests the existence of a persistent long-tail community and ongoing market awareness. At first glance, concentration metrics appear risky. The top 100 wallets control around 69% of supply, while the largest wallet alone holds roughly 11.4%. However, this data requires context because a significant portion of top holdings belong to centralized exchanges and infrastructure wallets, including MEXC, Qcoin, Kraken, Bitget, Gate.io, Wormhole Bridge, Uniswap liquidity pools. Exchange wallets represent thousands of users internally rather than individual whales. This makes the real distribution healthier than the raw percentages initially suggest. The largest unidentified wallet remains the primary risk factor because its activity could heavily influence short-term price movement and sentiment. On-chain activity also supports the thesis that NPC remains structurally active. Recent transfers continue involving bridge infrastructure, liquidity routing systems, exchange wallets, decentralized trading activity. Dead meme coins usually lose this infrastructure relevance over time. NPC still interacting with routing protocols and active trading systems indicates that liquidity providers and market participants continue supporting the ecosystem. Technically, the chart now resembles a long-term compression structure rather than active collapse. NPC already survived. 1. A major euphoric expansion. 2. Violent post-cycle correction. 3. Secondary recovery rallies. 4. Multi-stage distribution. 5. Extended stabilization. That survival matters significantly in crypto. Assets that persist through full cycles often develop strong market memory. Traders recognize the ticker, exchanges continue supporting it, and former participants remain aware of its existence. During future meme rotations, these surviving assets can sometimes reactivate far more violently than entirely new launches. The key bullish trigger would be reclaiming the $80 million to $100 million market cap region. Breaking that level would likely attract momentum traders and dramatically improve sentiment. Above that, the major macro resistance zone remains around $150 million to $250 million, where substantial prior distribution occurred. The biggest long-term risk remains narrative decay. Meme coins depend heavily on attention, culture, and speculative momentum. Without renewed community energy or another strong meme cycle, NPC could remain trapped in extended sideways consolidation. Overall, NPC currently appears to be a dormant but structurally intact meme asset. The speculative excess has already been flushed out, leaving behind a compressed market structure with lower volatility, stable liquidity, and persistent holders. Whether this becomes the foundation for another major expansion cycle or simply prolonged equilibrium will likely depend on the next wave of meme market attention and liquidity rotation.